Your views on this market today, of course, massive losses. What do you make of it?
Ingrid, unfortunately, it was just a really disappointing day today, really following on from the slump that we did see on Friday. But of course, in response to those falling oil prices, really a sign now, I think, that a lot of volatility is back in the market, but also a lot of uncertainty from investors. If we have a look at the sectors, the worst performing sector, of course, being that energy space, we saw oil tumbling again on Friday. WT oil was down 10%. As you mentioned, seeing Brent oil trading at its lowest since about 2009. As a result, we saw all of those energy stocks under pressure. But obviously, at the other end of the spectrum, we did actually see those airline stocks, as you say, Qantas performing quite strongly. Also, we saw that materials sector down about 4.9%. Copper was lower, gold was lower overnight, and as a result, we did actually see those stocks, the worst performers, the likes of Panos, Evolution Mining, as well as Northern Star, really dragging down that materials sector. Despite seeing iron ore up close to 2% overnight, we still saw a lot of those iron ore players under pressure. Fortescue was down close to 11%, BC Iron down about 8% or so. Of course, we had that economic data coming through earlier from China, the official manufacturing read, and that actually missed expectations. So I really think that didn't provide any confidence coming onto the market, and I really think there's still a lot of concern out there about a potential slowdown coming out of course, markets around the region, but of course, China. Volumes were about $4.4 billion today, reflecting a lot of selling across most sectors. We did see the property sector and the healthcare sector holding up fairly strongly. The property sector was the only one closing in positive territory to close the day off. And of course, that's in response to that falling Aussie dollar, which has reached 4.5-year lows. But overall, a really disappointing day on the market today, but really in response to those falling oil prices and of course commodities.
And in terms of Qantas, I read an analyst saying that it wipes about $470 million off its fuel bill for the second half if oil prices stay around this level. So that's close to $1 billion for the year. So how positive is this for Qantas?
Ingrid, I certainly think it does look fairly positive. In response, of course, to these OPEC commentary, we've seen Qantas having quite a strong performance since last week, up about 12% or so, up close to 5% again today. And I think there's actually been quite a number of broker upgrades and changes to their recommendations and target prices in response to these falling oil prices. I think there's an expectation that if we can actually see Brent oil hovering around that $70 mark, as you say, we could continue to see further cuts in a lot of their costs. And I think that certainly will add to the long-term growth story. I think in our view, we actually don't think that a lot of the benefits will flow through until around the second half of 2015, expecting that the first half will be relatively flat, but certainly expecting a lot of those benefits to flow through in response to those lower oil prices. I think in addition to those lower oil prices, a lot of analysts have been saying that obviously the domestic capacity war with Virgin is actually coming to an end now. We've seen domestic yields but for both Qantas and Jetstar reaching positive territory. We saw that in October, and that's actually been the second straight month that we've seen positive yields coming through. So expecting that a lot of that yield growth will actually continue, and that will certainly start to support that share price in addition to those falling oil prices. Of course, we did actually see the company returning back to profitability in the first quarter. So certainly an indication that potentially we might be seeing a bit of a turnaround. I think most analysts have that positive view, as I said, based on those lower oil prices, that domestic capacity growth continuing, but of course the benefits of that transformation plan flowing through and that cost reduction strategy as well. So I think all of that really adding to the outlook. Of course, this stock really is a bit of a fluctuating one in terms of that share price, but I think if we can continue seeing those oil prices trading at lows, I do think that we potentially will see some upside in that share price.
Mike and Leanne, what do you think? A Christmas rally unlikely?
Ingrid, look, I certainly think it's going to be questionable at this point. I think the falling commodity prices and, of course, the oil collapse that we have seen, I think that is going to have further ramifications for any further falls in those commodities as well. If we have a look at for the month of November, in fact, West Texas was down about 18%. That energy index over in the US down about 19%. The energy index on our market was down about 13%. So really seen some tumbles. If we look at the performance of the ASX since the start of the year, we are are now down about 0.7% or so, down about 7.5% since the peak that we actually saw at the beginning of September. So really have been under significant pressure, and of course mostly in relation to the falling commodity prices and of course collapsing oil prices. So I do think coming into Christmas, of course, there has been a lot of talk about a potential rally, but I do think that is probably going to be questionable. I think longer term, certainly the underlying fundamentals I think still do remain there. Valuations still do look okay. Earnings are growing, and of course coming out of the US we are continuing to see a strong performance over there and really strong data coming out. But I certainly think in terms of Europe and of course China, I think there's a lot of concern, but I do think that the concern now is going to be in terms of those falling commodity prices and oil prices really continuing and might actually continue to see some further selling pressure across those sectors.